I've made my view clear that a housing market crash is looking more and more likely every day. But not everyone agrees with me. Kevin O'Leary of Shark Tank fame thinks that commercial real estate is going to crash, but not residential. So I'm going to show you what he has to say and why I think he's wrong. But really quick, hit that like button, subscribe to the channel. I'm putting out more videos just like this constantly that you do not want to miss.
There's some really crazy stuff happening in real estate because I've been a real estate investor for 20, 30 years. Usually was the core holding in my portfolio, but that's changed quite a bit. So let me tell you what I'm thinking. Commercial real estate is going through dramatic change. Why? The pandemic changed behaviors of everybody all across America. Let's just take, for example, big office towers in New York City or in Boston or Detroit or any city. You know, before the pandemic, everybody went to HQ to go to work. Everybody said, okay, let's get in the elevator with 60 people, go up to 78th floor. But that's all changed. We've proven in this economy, because of COVID, that many people, let's say in accounting, compliance, logistics, they don't want to work in their cubicle anymore. They want to work at home. And they've learned over the last year they can do it successfully. So they don't want to come back. So that reduces the demand for office square footage dramatically. Think about this. You know, I know we're getting vaccinated, and that is great. But there's new strains. Every year there'll be a percentage of the population that never takes the vaccine. So COVID's coming back like a flu each year. And I think people are going to be more health conscious. They're not going to want to be jammed into elevators going up to 78th floor anymore. They're going to want to work from home. That's a bit of a trend. We don't know yet the total impact of it. So you've got this diminishment of the value of, you know, office space and commercial real estate and retail space. There's a lot of stores in third-grade malls, like really cheap places. They're not making any money because people are buying everything from Amazon and direct from companies. That's called the Great American Digital Pivot. So there's another asset class in real estate, basically 1,200 square foot strip mall stores, all kinds of other malls, not doing so well.
So Kevin is right here. People have changed. Habits and preferences have changed. People want to work from home more, they want to spend more time with their family and their friends and spend less time commuting to work. And businesses have noticed this as well. A lot of office jobs can be done from home just as effectively, and they don't want to pay thousands of dollars every month in rent for office space. So businesses are far happier to reduce their office sizes and save money on rent. Strip malls, movie theatres, poorly run shops are all suffering as well. If you want to buy something these days, the first place you look is Amazon. It's cheaper, faster, more convenient. The number of people going to physical stores and buying things is decreasing every year. All of this is affecting the prices of commercial real estate. Rents are down because businesses are running out of money. No new shops want to even open, especially in run-down shopping malls where no one really goes anymore. So the value of these commercial properties has decreased and will continue to decrease. This sector, commercial real estate, has been hit so hard by the pandemic, and it's hard to see how it's going to get any better. Kevin is definitely right about that. But next, Kevin's going to tell us why he thinks the housing market is going to keep going up. And that's where I have to point out some flaws in his thinking.
People want to live at home. They want to have their own space. They want to have a place they can live and work, raise their kids, take care of their parents, whatever they're going to do. So you've got this two different spheres of value. Commercial real estate down, residential real estate up. How up? Big time up, crazy up. Look at this city I'm in right now, taking you on a tour of, Miami. This is one of the hottest real estate markets in the world. So if you really think about it, you've got this split market. You've got commercial real estate, which I think is going to go down in value over the next couple of years. Not much, but it's going to, and I've taken my money out of that, and I've got into residential. Residential real estate is going to be really interesting. For the next few years, think about it. People don't have to work in a ratty little cubicle. They'd rather go out in the burbs and work there. Makes total sense, right? But it's also going to reflect in the value of residential. So, you know, if you're an entrepreneur, there's no question the trend to continue to buy homes, upgrade them. They call it flipping. I don't call it flipping, I call it investing, because you're going to fix up the kitchen and the bathrooms. So I would say that if you're thinking about investing in real estate, go residential, not commercial. There will be a chance. Think about something like a Bed Bath & Beyond. They closed 200 stores across America. Why? Because their online direct-to-consumer business was up 76%. What's going to happen to the stores? They're not going to be stores anymore. They have to be converted to climate control, pick, pack, and facilities with robots that ship stuff out to the suburbs. Think about those crappy little movie theaters in those malls, the tiny ones, not the big ones. I think they come back. The IMAX, that kind of thing. But a little ratty movie theater that's not going to get any capital spent on it, and your feet are going to stick on the carpet. Who wants to go there? They're going to zero. Another class of real estate. Big problem. And I just think you have to be pragmatic. Think about the way you're going to live, even after we all get vaccinated, which, by the way, is not going to happen 100%. There's going to be a lot of people that don't want to take the vaccine. So maybe 80% get vaccinated, the other 20% keep bringing it back every fall. That's going to be a huge problem. I want to talk about this in the context of investing, because real estate is a core holding for so many people and families. It's your number one asset. And in America, owning a home has always been what everybody wants. I think my thoughts are out there. No, Ned, on commercial real estate. You wait 24 months, let the prices come down, maybe go back in then, because I think they are coming down. Residential, yeah, everywhere. And if you're into it, buy places that need a renovation and fix the kitchens and the bathrooms and resell them. I think you can get really high returns on that.
So, Kevin thinks that the housing market is going to continue to go up because people are spending more time at home. And he's right to a certain extent. If you now work from home, you're going to want a home office, maybe a bigger garden, maybe a pool or a barbecue area. After all, you're going to be spending much more of your time there. And that would lead to an increase in house prices because everyone would be looking for those homes that are bigger and better. But the first thing that Kevin is missing is that it has already happened. People have been moving to bigger and nicer homes for over a year now. That's why the market has increased by 20% over the last year alone. But is it going to keep increasing at that rate? Well, it's just not possible. It's unsustainable. Our housing is more unaffordable than it has ever been in all of our history. People literally can't afford to keep paying more for their homes. And the second problem with what Kevin says is that he isn't considering what happens when the reality of our economy sets in. Kevin seems to think that there are no problems, that the economy is booming all by itself and that it won't stop. But he isn't looking at what's actually going on. Kevin didn't address at all inflation at record high levels. He hasn't addressed the increasing likelihood that interest rates are going to rise. He hasn't addressed the impact that a commercial real estate crash would have on the rest of the economy and on the housing market itself. Our economies are so interconnected these days that when the housing market crashed in 2008, every Western economy in the world saw a recession. If the commercial real estate market crashes, millions of people will lose their jobs. Millions of people will lose their investments. Businesses will go bankrupt, and this will affect everyone's wealth, not just those who work or own commercial real estate. Now, I think it's pretty obvious that the housing market isn't going to keep going up like it has been over the past year, but I do still think it's worth looking at what other people have to say, people who we disagree with. It's worth listening to their arguments, looking at the data. If we just ignore everything that goes against our views, then we would probably end up being wrong most of the time. It's really important to take in as much information as possible to broaden our horizons to make sure we're making the most accurate predictions possible. If you got this far into the video, hit that like button, subscribe to the channel. There's more videos just like this coming out constantly that you do not want to miss. Thanks for watching. Until next time.